on the profit. And so now we want to get our net profit, and let's add this together and see if gross profit is greater than this. So having done that, we see that gross profit is greater than the total of A and B. So that means if you find it, let's find the difference. The net profit for department A is a 951,996 and 35357. You can see that here now, you can see that the department A has profit more than that of department B. So it helps us to ascertain the profit. That is the importance of a department, to know the performance of each department. That is why the company is segregated into different departments. So we have let's balance it. 414, 59, 628. We have 141042. So let's balance it. It's 14. You don't have any discounts received. So I think we have it. We'll have put it under the gross profit. Is additional income. So that is that on the department trading profit and loss. Now let us now prepare balance sheet as at that date. So balance sheet. December 2000. Now let's start from the capital side before we do that of fixed assets. Now we have a capital. Our capital is 64,000. Look at the total balance, you see it there. Then we have the total profit. That means the profit of department A, the profit of department A and department B. So that is 87,035. So let's add it. We have 151,354. Then you less drawing, which is 33,500, is in the trial balance. We have 117,854. Now let's do our current liability. Current liabilities, we have creditors. We have creditors of 5060. We have bank, which is 6, and if you can see here, why is bank under this? We call it overdraft. Yes, you can see here, why is bank? Why do we put bank under current liability? Is that look at this information, you see bank has to be debited because bank is supposed to be a current asset. Now it is being credited. That is the area where one has to be very careful. Since it is on the credit side, that means they are telling you that the company has overdraft, so which is represented as bank. So that is why it is classified as a current liability. Then we have a loan of 50 years, and don't forget we have accruals, which is outstanding. We have outstanding of salary and that of insurance. So don't forget, I told you any information in the additional information will be treated twice. So let's add it. We have a 6384. At the end of the day, we have 178238. That is that on the capital side. Now let's now go to the assets claim side and see if that current asset will correspond with that of capital. So we have a fixed asset. We have a freehold premises. There is no depreciation on that. We are not told to prepare depreciation on that. So there is no depreciation on the motor vehicle based on the information. That we also have a 56,000. That is a cost, which is the historical cost. But that of fixture and fitting, don't forget we have depreciation of depreciation. But here you remember that depreciation is a 3160. Depreciation of furniture and fitting is 310. But in additional information, we also have another provision for depreciation, which is 7,600. We have 7,600 here, and so what we now do is that since the furniture and fitting is 31,600, then you now less the depreciation. Now you add the one of provision and the one of that year. That of that year is 31, of which it has been allocated to each department. Now we also have the accumulated one, which is in the additional information. So you add it together, you have a 10,760. That is what you will deduct from the cost, which will give you 20,840. So let's add the total fixed asset. You have a 132, you have 840. So let's go to the current assets. Now let's start with a stock. Stock A is a 15,006. Then stock B, which is the closing stock of stock B, is a 11,416. We add it together, we have 26,422. Now we have don't forget we have a cash in hand, which is also part of the current asset. Then we have a debtors. There is no adjustment for debtors. There is no bad debt in the additional information. So then don't forget we have a rate prepaid. We have rate prepaid, and the prepaid is what you have paid. You have paid in advance, and you have not, something that has paid in advance has not been enjoyed. That's what we call prepaid. So it's part of the company asset. So that's that. Now let's add the total. Having added the total, we have 178,238 at the end of the day. You can see that the two sides balance. So that is how we prepare department. It's very simple. The way you prepare that of paid, that is exactly the way you prepare it. But the difference here is you need to you segregate it to where each department has been given in the question. So that is that on the departmental account. Now we'll be talking on the branch account. You know, accounting, we have different type of accounting. We have different types, a lot of accounting, and that is why the way the approach is to different accounts differ. So the way we prepare branch account will be quite different from that of branch account. So let's go into the branch account to see how it goes. Branch account is a part of the business which is segregated physically from the main business. And the word branch, you could have identified here that branch is when the company is running a company and there is need to expand the business. So that means they need to get other branches. You know, when there is need for an expansion of the business and when the business is growing, then the company will want to have another branch in any side within part of the side of the country or across the country. They can have it locally or that of a foreign. So that is what we think about branch account. That means how the headquarters prepare branch accounts, and the other branch will be selling the same product that the company that of the headquarters is selling. So it's just a way whereby the headquarters are the many branches which they do operate under that of a head office. So that is what we call branch account. Now, what are the type of branches? We have a local branch where we also have foreign branch. Now, what are the local branch? Is the branch that is located within the geographical area or country where the head of the company is located. Take for instance, in Nigeria now, a particular organization has a head office in Ibadan, and they also have head office in Abuja. That is branch office in Abuja. We can't have two head offices. We have one head office and we have branches. What is a foreign branch? Foreign branches is the branches that is located across the country. That means outside the geographical area where the head office operates or where the head office is located, like Ghana, London, UK. There are some companies like that they have their head office in Nigeria, and they have a branch in the other country. So that one is classified. Those branches are classified under the foreign branches. Now, let's look into what are the importance of branches. Why are we preparing a branch account? Number one, it helps to prevent wastage. Second one is it helps to prevent fraud and other malpractice. Then the next one is to ascertain the profit and loss for each branch. Then another one to assess the performance of each branches with the help of account. That is the reason why account is very important, because having prepared the account, it ensures the accountants to know the performance when they prepare the profit and loss at the end of it. So to assess the performance of each branch, that is the reason why we are preparing branch account. Now, there are some things, there are vital areas